Most owners run sales minus expenses equals profit, right? But you teach sales minus profit equals expenses. Can you walk me through why that flip and why it changes?
If it's sales minus expenses equals profit, then profit's a leftover.
Where do you see people trip up the most?
They try it for a month and they're not getting the results they wanted and they give up. The system isn't broken. Your business is.
So welcome to Ask Frank. We're in 15 minutes. We have an expert answer one of our audience members' questions. Today, we're really lucky to have Rocky Lalvani, the founder of Profit Comes First. And today he's here to answer the question from Adam in Houston, who's written in that he's profitable but broke. His P&L shows he made money, but his bank account is close to empty. And I guess what he wants to know is, where is his cash in? How does he free it up in the first 90 days? So yeah, Rocky, welcome. Thanks very much for joining us.
Thank you for having me, William.
Now, I guess, Rocky, it'd be great if you can set the scene, right? And, an owner pulls up their P&L, they're profitable, pulls up bank account, and it's empty. Why does this happen, and why don't owners see it coming?
So part of the problem is the P&L is an accounting report created by accountants, and it's designed for you to pay taxes and for the bank to evaluate you or an investor to evaluate you. But the P&L, that profit number is fictitious. It doesn't exist in most businesses. So that's why this gentleman pulled up his P&L and said, I made money and there's no cash, because there's a lot missing from the P&L. And that's where all his cash disappeared. So if we want to know where the cash disappeared, it most likely disappeared on the balance sheet. And where it disappeared first is probably, did your client pay you? So we reported a sale on the P&L, but we didn't collect the money. So it could be sitting in the client's pocket. The second thing, if they are in a business that has inventory, and a lot of businesses may not even think they have inventory, like I'm in the trades, I go to the store, I pick up stuff and it's all sitting in my truck. That's still inventory. A lot of times that stuff is sitting in inventory, and that's why you have no cash. Your cash is in the inventory on your shelf. You could have bought assets, or you could have bought something. So last year you were profitable and your accountant said, you're profitable, you don't want to pay taxes, buy a truck. Well, your profit is sitting in your truck and it's showing up on the balance sheet. The other thing is, if the owner took a distribution, it's showing up on the balance sheet. And so he already took money out of the company. So those are some of the biggest places that we find, along with loans. So when you make loan payments and you pay back the loan, the interest part shows up on your P&L, but the amount that you're actually paying back of the loan, that's on your balance sheet. So you have to understand how to look at it all together to understand where the cash is. And that's why Profit First is so helpful, because Profit First shows you where the cash is. It doesn't care what your P&L says.
And I think that's a great segue, right? Because most owners run sales minus expenses equals profit, right? But you teach sales minus profit equals expenses. So, can you walk me through, why that flip and why it changes, how the owner actually views their business?
So that has to do with just a shift in mindset, right? Mm-hmm. If it's sales minus expenses equals profit, then profit's a leftover, right? It's not something that you decided that you were going to have. When you do sales minus profit equals expenses, you're saying, I'm taking my profit first, I'm paying myself first, and now I'm constraining my expenses. And we have to constrain them. We have to be frugal business owners. Look at Elon Musk. Elon Musk is the richest guy out there. And he's frugal. He'll walk on the factory floor. Why are you using 4 screws instead of 3? And if you don't have a good, solid answer, you're fired, right? He won't tolerate that type of behavior. Why are you wasting my money? And business owners should be the same way. Profit First is nothing but it's like a traffic light, right? It just tells you red, yellow, green. It doesn't tell you why. It just says your cash is red, yellow, green. You look at your bank account. That's what most business owners do. The problem with the way they do it right now is when they look at their bank account and it's red, there's no reserves, there's no extra. They forgot to pay themselves. There was no money for taxes. With Profit First, we take all the things that you're supposed to do and set them aside. So you go red a lot faster than you would otherwise. And so it's not as painful when you hit a red. You have reserves. You know that there's some other money around. And that's all it is. It's a cash management system that is real time, that you don't have to look at your accounting system. You don't have to worry if somebody updated it, not updated it. This is reality. And that's all it is.
And just tying onto that, do you have certain like benchmarks for where, you know, the sales of the business are to where the sort of profit you should be targeting are?
In the book, there's an entire table with benchmarks.
Yeah.
They are averages. I don't know about you, but average sucks. Right? So they're averages. You want to be that.
You don't want to be average.
Right? But the point is, most businesses aren't even average. They're below average. And so that at least is your kick in the pants to get to average.
And so if I understand based on the book, you set up 5 accounts, right? You've got income, you've got profit, you've got owner's comp, tax, operating expenses, you know, one at a time, what goes where and why does it matter? And then I guess what's the change that's going to start happening as you start viewing your business?
So if you look at a single bank account, it's very difficult to tell how much money came in and how much is actually left and what the purpose of the money is. So when you have an income account, what you do is on a regular basis, no more than once a week, most people twice a month, maybe even once a month, you look at your income account and you go, this is how much money came in since the last time I did it. Now, you can watch your income account over every week just to see how money's coming in. And then you go, okay, now I need to distribute my money. So the first thing we do is we take our profit, because profit comes first. And we put aside our profit. Then we put aside our pay. And the reason we do this is most business owners pay themselves last. Why not pay yourself first? You took the risk. You did the work. You deserve to get paid. So pay yourself first. Then we set money aside for taxes, because the tax man, they come take it, right? So let's put that money aside. And then what's left goes into your operating account. Now you have a true picture of how much money you have to run your business. And you got to learn your business on that. And so now when it's time to pay taxes, you're like, I have the money. Okay. When it's time to pay yourself, you're like, oh, I have the money. Okay. When your OPEX account goes negative, you're like, something went wrong. I got to go fix it. But you know what? There's some money in my profit account. I'm going to dip into it, but I know I'm taking away from my profit. I know I need to fix something in this business. Something went wrong. My numbers aren't doing what they're supposed to. And that sends you on a goose chase to say, what went wrong and how do I fix it?
And then I guess from a practical point of view, you know, you take someone who's doing $1 million a year, $2 million a year, you know, they're running a restaurant or, you know, they're a plumber, they've never done profit first. Day one, week one, you know, what does the discipline actually look like to set this up, you know? And then on the flip side, where do you see people trip up the most?
So day one is the most difficult. It's when you have to open the bank accounts. Business owners can't open these bank accounts. It's like really hard. I don't know. It means you have a bad relationship with your bank. Because if you had a great relationship, you'd call them up and they'd open your accounts. And they wouldn't charge you extra for them. So day one, we open the bank accounts. Now we have to switch everything around, which is another pain. We have to make sure all our money is going on our income account and all of our expenses are coming out of the operating account. So you got to figure out what your existing bank account. Is it going to be your income account or your operating account? And then you move the things appropriately, and now things start to happen. Now, in the beginning, it's all going to go wrong. Your operating account's always going to be negative, and so you're going to be moving money, trying to cover things until you get the rhythm down. And this is where people fail, okay? They try it for a month, and they're not getting the results they wanted, and they give up. And here's the thing. I don't know about you. So start small. Like what I suggest is if you haven't done this before and you're always struggling with cash, put 99% in the operating account, put 1% in the profit account. Like take a baby step and start there. And then little by little, every month or every 2-3 months, keep cranking the levers up. So I think people rush to it. 2, the system isn't broken. Your business is. You've got to figure out what's wrong with the financial model in your business that the cash is not where it's supposed to be. It could be the way you price. It could be how much revenue you have coming in. It could be the terms you're giving clients. It could be your discounts. It could be you misquoted. It could be your overhead's too high. It could be you have too much debt. Like there's a million reasons. You've got to figure out what those are. And that's what I learned with Profit First. Profit First just tells you have a red light. It doesn't tell you why and where. And so that's why I wrote the follow-up book, which is my book, The Profit Blueprint. And in there, we show you all the different ways that this occurs, and we give you a simple tool to be able to figure it out for yourself.
Yeah. And I mean, I think why I like this sort of system is because it forces a real discipline, right, around trying to understand where your business is breaking. I mean, I've run small businesses before, and, I can't remember ever having the same expenses every single month on month, right? They're always ballooning, and trying to figure out exactly why, I think is an incredible discipline to implement. So I guess maybe coming on the flip side, right? Because there's some downstream impacts, obviously, for, when it comes time for year end. I guess, what do you say to like a CPA, right? Who's saying, profit first is 5 savings accounts and we're kind of introducing a haircut here. Like what part are they missing, right? For us to push back on.
So most accountants go, 5 accounts, that's so much work.
Yeah.
No, it isn't. It really isn't. Everything's automated today. Hell, you've got AI doing half of it. All this stuff downloads. Okay. Like tell your accountant to find a computer and some software. Like it's not difficult. If you're doing it cleanly, it's 10 extra transactions a month. It takes all of about 3 to 5 minutes. A lot of accountants freak out because they just don't get it. It's not, they think of it as a burden, and it's not, and they don't understand it's not an accounting system and it's not difficult. Once they start to get clients on the system and they start to see how their clients have changed, meaning there's more and more money in the business, they start to believe. And that's just the way it is.
And just kind of digging into that, it'd be great to understand some of, like, one of the successes that you've had, right? With some of these businesses, like what have you seen? How, I guess, how beneficial can this be?
So Profit First isn't really Profit First. The only way Profit First makes a change and they get success, and it's true for a lot of business owners. A lot of business owners have this attitude of, I see money, I spend money. For those types of business owners, what it does is it gives them guardrails. It says, this is the only money you're allowed to spend. And so for a business owner like that, it's really good. For other business owners, it's the first step to understanding you have a cash flow problem, and now we need to figure out why and what to do about it. So, like I said, it's the warning bell. It doesn't give you the solution. Every business has a different solution, and we talk a lot of them because they're on the balance sheet. It's being able to understand what's the right solution for your particular business and how do you have to change your business model. All Profit First does is warn you you've got a problem. And then it says, go think. Everyone missed that part of the book of now go think, right? It could be, well, and Mike has other books and some of them do it. But you have to understand something. Mike's not a financial guy. He didn't write this through a financial lens. So his thing is, show me how much money I can spend and lock the rest away from me because I will spend it if you show it to me. And so that's his mentality. So he wrote it for that type of person. What we do is layer on top of it the discipline to say it's a pricing problem. It's a marketing problem. It's an overhead problem. It's a debt problem. It's a collection problem. And that's where you really need the help if you don't get that part of it to say, what part is broken? I know I got a red light, but I don't know where the red light's coming from.
So yeah, I mean, we'll certainly put something in our notes. I guess, look, just to finish off, we always finish off with one question. If you could tell one owner one thing, just one thing at all around the gap between profit on, paper and money in the bank, what would it be? Like, what would your advice be?
The number one lever on its own that is massively powerful, if you can use it, is pricing. If you can increase pricing, for a lot of businesses, increasing pricing 5 or 10% can literally double their profit. And so you got to figure out, how do you get pricing power? And a lot of business owners are afraid to raise their prices. And so it's an emotional game, and you have to learn how to do it.
Rocky, this has been amazing. Thank you so much.